They spent their whole lives doing everything right, working hard, saving a little each month, trusting the system that promised them peace after decades of struggle. But one morning, they opened their retirement account and saw numbers that didn't make sense. The money they thought would last forever was slipping away. It wasn't a bad investment or a stock market crash. It was something deeper, something hidden. Across America, millions of retirees are discovering that the future they planned for is no longer guaranteed. The rules have changed, and no one told them. Inflation, fees, false promises, and rising costs are quietly eating away at the dreams of those who built this country with their hands. The saddest part? Most don't even realize it's happening until it's too late. Because the real danger to your retirement isn't losing your money overnight. It's watching it disappear, slowly, silently, year after year.
For decades, retirement was sold to Americans as the reward for a lifetime of hard work. You put in your hours, you saved what you could, and when the time came, you'd finally get to rest. The dream was simple: a little house paid off, a steady pension, and the freedom to enjoy your final years without worry. But somewhere along the way, that dream began to crack. The promise of retirement security, the very idea that you could work for 40 years and then live peacefully, no longer holds true for millions of Americans. Meet James and Linda, a couple from Ohio who did everything right. They followed every piece of traditional advice: save for retirement, invest in a 401k, buy a modest home, avoid unnecessary debt. They weren't trying to be rich, they just wanted safety. But when they finally retired, they discovered the numbers didn't add up. Their grocery bills had doubled, healthcare costs had tripled, and their retirement savings, the $400,000 they worked their entire lives to build, suddenly felt like a drop in the ocean.
This story isn't rare anymore. It's America's new reality. The average retiree today is facing threats that simply didn't exist a generation ago. Inflation is one of them, the silent thief of purchasing power. When prices rise faster than your savings grow, your money quietly loses its strength. A dollar that once bought a full meal now barely buys a cup of coffee. The cruel part? Inflation doesn't make headlines until it's already destroyed your plans. Then there's the market volatility, another hidden danger. For decades, Americans were told to invest in the market because it always goes up in the long run. But that advice assumes one thing: time. Time to recover from crashes, time to ride out recessions, time to wait. Retirees don't have that luxury. When the market dips 20% and you're living off withdrawals, it's not just numbers on a screen. It's your grocery money, your medicine, your rent. And as more retirees depend on the stock market than ever before, their futures have become tied to forces they can't control. But perhaps the most overlooked threat is the financial system itself, the one that profits when you stay confused. Many retirement accounts are filled with hidden fees that eat away at your nest egg year after year. Expense ratios, management fees, advisory fees, small percentages that sound harmless but quietly drain tens of thousands of dollars over time. And most people never see it coming because those fees are buried deep in fine print, disguised behind complex charts and professional advice.
There's also a psychological trap built into modern retirement: the illusion of safety. People believe that because they have a 401k or IRA, they're protected. But these accounts are not shields, they're just containers. What's inside them and how it's managed determines everything. A bad investment, a high-fee fund, or an unexpected market crash can turn a secure retirement into a financial emergency. And as if that wasn't enough, America's safety nets, Social Security and Medicare, are under pressure too. Costs are rising, benefits are uncertain, and younger generations are paying into a system that may not sustain them later. For retirees who depend on these programs, that uncertainty adds another layer of anxiety. The system that was meant to protect them is now straining under its own weight. The truth is, the American retirement system wasn't built for the world we live in today. It was built for a time when people lived shorter lives, had steady jobs with pensions, and prices stayed relatively stable. Today, people live longer, work in unstable careers, and face skyrocketing living costs. Yet the same old advice, save and invest, is repeated like a broken record.
That's why so many people are finding themselves trapped. They worked hard, played by the rules, and still ended up behind. It's not because they were careless. It's because the system shifted beneath them while no one was watching. The dangers aren't just economic, they're emotional. The stress of wondering whether your savings will last another decade, the guilt of cutting expenses just to make ends meet, the quiet fear of becoming a burden on your children. These feelings are now part of the retirement experience for millions. And here's the painful irony. The people most affected are often the ones who tried the hardest to prepare. The disciplined savers, the responsible workers, the ones who believed in the American dream. They trusted that if they did their part, the system would do the rest. But the truth is, the system changed, and no one updated the rules. The real danger isn't that retirement is impossible. It's that most people are walking into it blind. The threats aren't dramatic, like stock market crashes or sudden disasters. They're slow, invisible, and constant. Every year, a little more value disappears, a little more purchasing power fades, a little more stress builds up, until one day, the retirement you imagined doesn't look like the one you're living.
This is the new American retirement crisis, not marked by headlines or panic, but by quiet erosion. And unless we start seeing these hidden dangers for what they really are, millions more will wake up one day realizing that their golden years have turned into a financial struggle they never expected. For most of the 20th century, retirement in America was built on three pillars: pensions, personal savings, and Social Security. It was called the three-legged stool, a stable foundation that gave millions of Americans confidence about their future. But today, that stool has lost two of its legs, and the last one is wobbling. What was once a symbol of security has become a balancing act on shaky ground. Let's start with pensions, the first leg that disappeared. Decades ago, most American workers could count on a pension from their employer. You'd work 30 or 40 years, and in return, you'd receive guaranteed income for life. It was a promise. But over time, corporations realized that pensions were expensive. They shifted the responsibility from the company to the individual, replacing pensions with 401ks. It sounded empowering. You control your own future. But it also meant that the risk was now entirely on you. Instead of professionals managing your retirement, you were expected to become your own financial planner, investor, and risk manager, all while working full-time and raising a family. And here's the problem. Most people were never taught how to do that. The system assumed that the average worker would suddenly understand markets, diversification, and compound interest. In reality, many just followed whatever option their employer offered by default. They didn't know if their investments were high risk, high fee, or poorly diversified. They trusted the system to work, the same system that quietly transferred all the responsibility onto them. Then there's personal savings, the second leg. Americans have been told for generations to just save more. But saving is no longer as simple as it used to be. Wages have stagnated for decades, while the cost of everything, housing, healthcare, education, has exploded. The average family spends almost everything they earn just to keep up with daily life. So when experts say, save 15% of your income, it feels like a cruel joke. For many, saving for retirement isn't a choice, it's a luxury. Even those who do manage to save face another harsh reality. The money they put away isn't safe from inflation. A $100,000 savings account today will buy far less in 20 years. Inflation doesn't just raise prices, it eats time. It punishes patience, and it punishes those who try to play by the rules. That leaves the final leg, Social Security. For millions of retirees, this is the only thing standing between them and poverty. But even this safety net is fraying.
The system was built in an era when people didn't live as long and there were more workers paying in than retirees drawing benefits. Now the balance is flipped. Fewer workers, longer lifespans, and rising costs have strained the system to the edge. The Social Security Administration itself has warned that by the mid-2030s, it may not be able to pay full benefits unless changes are made. Imagine working your whole life expecting stability, only to find that the system you depended on might not hold up when you need it most.
All of this has created what economists call the retirement gap, the growing distance between what people have saved and what they'll actually need. The numbers are staggering. According to recent studies, nearly half of Americans over 55 have no retirement savings at all. Among those who do, the median balance in a 401k is under $100,000, enough to last maybe 3 or 4 years in retirement, not 20 or 30. And yet, despite these numbers, the illusion continues. Financial commercials still show smiling retirees walking on the beach, playing golf, and living carefree lives. But for millions, the reality looks very different. Anxiety over bills, fear of medical expenses, and working part-time just to survive. Retirement in America has quietly shifted from a reward to a risk. There's another danger that rarely gets discussed, the emotional and psychological side of it. Many retirees feel shame for not having enough, even though they did everything they were told. They feel like they failed, when in truth, it's the system that failed them. Decades of financial advice put the burden entirely on individuals, without acknowledging that the economy, wages, and policies make true financial independence nearly impossible for the average person.
The shift from community security to individual responsibility has created a generation of silent strugglers. People who live modestly, don't complain, and quietly watch their savings shrink as prices rise. They don't make headlines. They don't fit the image of crisis, but they represent the real story of retirement in modern America, a slow erosion of stability hidden behind polite smiles and careful budgeting. And this isn't just about today's retirees, it's about the future. Younger generations are now entering a world where retirement may not exist in the way their parents imagined it. Pensions are gone. Savings are harder to build. Housing costs keep climbing. The promise that hard work pays off in the end feels less certain than ever.
The truth is, America's retirement crisis didn't happen overnight. It's been building for decades, layer by layer, policy by policy, paycheck by paycheck. Every small shift, a fee here, a policy change there, slowly moved the risk from corporations and government onto individuals. And now, the weight of that risk is crushing millions who are realizing too late that the game was never designed for them to win. This is the hidden story, the one no one wants to talk about. Because if we face it honestly, we have to admit that the dream of retirement as we knew it might already be gone. For millions of Americans, the danger to their retirement isn't a single big mistake. It's a series of small, quiet traps that slowly bleed their savings dry. These dangers don't make headlines. They don't crash overnight. They work silently, hidden behind fine print, polite financial advice, and the illusion of security.
One of the biggest threats is the quiet bite of fees. Most people don't even notice them. A 1% management fee here, a service charge there. But over 30 years, those tiny cuts can devour hundreds of thousands of dollars in lost growth. It's like a slow leak in a tire. By the time you realize what's happening, the damage is already done. Many retirees never see that money again, and the financial firms collecting it don't need to take any risk to profit. They just need you to stay unaware. Then comes inflation, the invisible thief that never sleeps. It doesn't take your money directly, it just makes everything you buy more expensive. Over time, it eats away at purchasing power like rust on metal. A retiree who once budgeted $3,000 a month might find it barely covers necessities 10 years later. Groceries, healthcare, rent, all rising quietly while fixed incomes stay the same. Inflation doesn't just shrink your wallet, it steals your peace of mind.
Another danger comes from bad advice disguised as expertise. Many Americans trust financial advisors without realizing that not all of them are required to act in their best interest. Some are salespeople in disguise, pushing products loaded with hidden fees and lock-in periods. They earn commissions from your trust, not your success. People think they're being cautious, but they're often being cornered, paying for safety that benefits someone else more than them. Then there's the unpredictable nature of the market. A lifetime of savings can crash overnight when the economy turns. Just as someone plans to retire, a downturn wipes out 30% of their portfolio. They panic, sell, and never recover. The media makes it worse, flooding screens with fear, turning every dip into a disaster. It's emotional exhaustion, and it ruins long-term plans built on short-term reactions.
But not all dangers come from outside. Some are built from habits, the slow rise of lifestyle inflation. Each raise leads to a little upgrade, a better car, a larger house, a nicer vacation. It feels harmless, even deserved, but over decades, these small increases add up to a life that costs too much to sustain once paychecks stop. People end up rich in memories, but poor in stability. And beneath it all lies the most dangerous illusion: trust. Trust that the system will always protect you. Trust that Social Security will be enough. Trust that there's still time to fix things later. But retirement doesn't wait. The system wasn't built for fairness, it was built for profit. Those who understand that early have a fighting chance. Those who don't are left wondering how a lifetime of work could end in worry.
These dangers aren't dramatic, but they are devastating. They don't strike all at once. They creep in quietly, year by year. The good news is that awareness is power. Once you see where the leaks are, you can finally start patching them and take back control of your financial future before it's too late. The deeper you go into the American retirement system, the more cracks begin to show. For decades, workers were told that if they just contributed to their 401k, everything would be fine, that compounding interest would take care of the rest. But today, those old rules are breaking down. The cost of living has exploded, healthcare prices have doubled, and Social Security is running dangerously close to depletion. What once felt like a safety net is starting to feel like a ticking time bomb. Behind the calm words retirement savings lies a harsh truth. Most people are not saving enough, and even those who are might be saving in the wrong way. A recent study showed that nearly half of Americans aged 55 and older have less than $100,000 saved for retirement.
That might sound like a big number, until you realize it wouldn't even cover 5 years of modest living expenses, let alone medical bills, housing, or emergencies. The dream of retiring peacefully by the beach has quietly turned into the nightmare of working part-time just to pay the bills. And then there's inflation, the silent thief. Every year, it eats away at your purchasing power without you noticing. The money sitting in your retirement account might look the same on paper, but its real value is shrinking. That $1 million retirement goal your parents talked about? In today's dollars, it's closer to $500,000 in value. If inflation stays high for another decade, the cost of groceries, rent, and even basic medication could easily outpace what your investments can earn. Then there's the market risk. Too many retirees are betting their entire futures on Wall Street, trusting that the market will always recover. But what happens if the next crash hits right after you retire? You don't have the luxury of time anymore. One bad market year can erase a decade of careful savings. Many people learned this the hard way in 2008, and some never recovered.
Now, with the global economy facing new threats, that danger is once again knocking on the door. The hidden fees are another trap. Mutual funds, index funds, advisors. Many take a small percentage every year, quietly draining your returns. It might seem like nothing, 1% here, 0.5% there, but over 30 years, that could mean hundreds of thousands of dollars lost. It's like trying to fill a bucket with water while someone's drilling small holes at the bottom. And if that wasn't enough, Americans face one more silent killer of retirement dreams: lifestyle creep. It's the urge to spend more as you earn more. A bigger car, nicer vacations, better clothes. It feels like success, but it comes at the cost of your future. Many people convince themselves they'll start saving seriously next year, only to wake up at 50 with too much debt and too little time.
The real tragedy isn't that people are lazy or careless. It's that the system itself is built on assumptions that no longer fit reality. The average American now lives longer, spends more, and faces higher healthcare costs than ever before. Yet the advice being given hasn't changed much since the 1980s. People are being told to walk an old financial path through a new, unpredictable world. By the time they realize the danger, it's often too late. Their 401k is smaller than expected. Their house isn't worth as much as they hoped. And that retirement plan that once looked solid on paper begins to crumble under real-world pressure. The danger isn't just losing money, it's losing time, freedom, and the peace of mind that retirement was supposed to bring. But the truth is, it doesn't have to end that way. Those who understand the hidden dangers early can still change their future if they're willing to face the uncomfortable truths now before it's too late.
The deeper you go into the American retirement system, the more cracks begin to show. For decades, workers were told that if they just contributed to their 401k, everything would be fine, that compounding interest would take care of the rest. But today, those old rules are breaking down. The cost of living has exploded, healthcare prices have doubled, and Social Security is running dangerously close to depletion. What once felt like a safety net is starting to feel like a ticking time bomb. Behind the calm words, retirement savings, lies a harsh truth. Most people are not saving enough, and even those who are might be saving in the wrong way. A recent study showed that nearly half of Americans aged 55 and older have less than $100,000 saved for retirement. That might sound like a big number, until you realize it wouldn't even cover 5 years of modest living expenses, let alone medical bills, housing, or emergencies. The dream of retiring peacefully by the beach has quietly turned into the nightmare of working part-time just to pay the bills.
And then there's inflation, the silent thief. Every year, it eats away at your purchasing power without you noticing. The money sitting in your retirement account might look the same on paper, but its real value is shrinking. That $1 million retirement goal your parents talked about, in today's dollars, it's closer to $500,000 in value. If inflation stays high for another decade, the cost of groceries, rent, and even basic medication could easily outpace what your investments can earn. Then there's the market risk. Too many retirees are betting their entire futures on Wall Street, trusting that the market will always recover. But what happens if the next crash hits right after you retire?
The hidden fees are another trap. Mutual funds, index funds, advisors, many take a small percentage every year, quietly draining your returns. It might seem like nothing, 1% here, 0.5% there, but over 30 years, that could mean hundreds of thousands of dollars lost. It's like trying to fill a bucket with water while someone's drilling small holes at the bottom. And if that wasn't enough, Americans face one more silent killer of retirement dreams: lifestyle creep. It's the urge to spend more as you earn more. A bigger car, nicer vacations, better clothes. It feels like success, but it comes at the cost of your future. Many people convince themselves they'll start saving seriously next year, only to wake up at 50 with too much debt and too little. The real tragedy isn't that people are lazy or careless. It's that the system itself is built on assumptions that no longer fit reality. The average American now lives longer, spends more, and faces higher healthcare costs than ever before. Yet the advice being given hasn't changed much since the 1980s. People are being told to walk an old financial path through a new, unpredictable world. By the time they realize the danger, it's often too late. Their 401k is smaller than expected, their house isn't worth as much as they hoped, and that retirement plan that once looked solid on paper begins to crumble under real-world pressure. The danger isn't just losing money, it's losing time, freedom, and the peace of mind that retirement was supposed to bring. But the truth is, it doesn't have to end that way. Those who understand the hidden dangers early can still change their future if they're willing to face the uncomfortable truths now, before it's too late.
The truth is, it's not too late to protect your future, but it starts with unlearning some of the lies that have been sold to millions of Americans for decades. The idea that the system will take care of you has quietly destroyed more retirements than market crashes ever did. No one is coming to save you. Not your employer, not Social Security, not the next bull market. The only person who can truly protect your future is you. The first step is awareness. Most people avoid thinking about their retirement until it's almost here, but by then, the damage is already done. Take a hard look at your finances today. How much are you actually saving? How much are you paying in hidden fees? How much of your portfolio is vulnerable to inflation or market?
The next step is diversification, not just in investments, but in strategy. Having all your retirement money in the stock market is like standing on one leg and hoping the ground doesn't shake. Build multiple streams of stability, part stocks, part bonds, part real assets like real estate or commodities, and even a portion in cash or high-yield savings for emergencies. The goal isn't to predict the market, it's to survive it. Then comes discipline. The most powerful tool in personal finance isn't intelligence, it's consistency. The habit of saving, even when it feels small or insignificant, compounds faster than people imagine. Every extra dollar invested in your future today is a dollar that works for you, not against you. And cutting unnecessary spending, the lifestyle creep, the emotional purchases.
But one of the most overlooked pieces of retirement security is emotional strength. The fear of missing out, the panic during downturns, the temptation to follow the crowd. These are what destroy wealth. During every market crash, millions of Americans sell at the bottom out of fear. Then, when prices recover, they buy back in too late. Learning to control emotions is as critical as learning to read a financial statement. And finally, it's about purpose. Retirement isn't just about money. It's about freedom, peace, and meaning. Too many people reach the end of their careers only to feel lost and anxious. The happiest retirees aren't necessarily the richest ones. They're the ones who plan for a life beyond work. Whether it's starting a small business, volunteering, or mentoring others, having a reason to wake up every day can be as valuable as the size of your savings account.
The hidden dangers to your retirement are real. Inflation, debt, market crashes, poor planning, and false security. But they're not undefeatable. The people who thrive in the next decade will be the ones who take control now while there's still time. America's financial landscape may be uncertain, but personal responsibility never goes out of style. Your retirement story is still being written. The question is, will it be a story of regret or resilience? The answer depends on what you decide to do today. As this story closes, think about what your future self would say to you 10, 20, or even 30 years from now. Would they thank you for the choices you made today, or wish you had started sooner? Every moment you delay taking control of your retirement, you're handing that control to someone else, a system that may not have your best interests at heart. This isn't fear-mongering. it's reality. America is changing fast. Markets are unpredictable, inflation is stubborn, and safety nets are shrinking. But those who prepare don't just survive, they thrive. The difference between struggle and security often comes down to one thing: action. Small, consistent steps toward financial clarity can protect a lifetime of hard work. If this story spoke to you, don't just scroll away. Take one small action today that your future self will thank you for. Maybe it's checking your retirement account, cutting one unnecessary expense, or simply learning more about how money really works in America. And if you want to keep uncovering the hidden truths about money, success, and survival in today's economy, make sure to subscribe, hit that bell icon, and share this video with someone who needs to hear it. Because the next episode might just be the one that changes how you see your financial future forever.